Everyone, good morning. We are indeed very honored to have two very distinguished guests on this panel, Teck and also Sid. Good evening, Sid. Thanks for taking this discussion panel at such a late hour at your time. And Sid joins us from the US. Now, we're going to talk today about a very exciting topic, which is AI revolution in investment management. It's a topic very close to my heart as well because I'm involved in doing a lot of AI work within UOB Asset Management. Now, I noticed one thing, though, that I think there are a lot of things that have been written about AI in many industries, many different areas, but actually very little is written or talked about in the asset management area. So maybe I can ask you this first question, Teck. Now, you've had a lot of experience working with fintech. I'm sure a lot of them are AI as well. Now, maybe let's take a step back and ask a very basic question. Now, do you think investors should even consider using AI in investment management? And then what are the risks involved?
Thanks, Paul. Good morning, everybody. Yeah, so maybe just a bit of introduction, right? I mean, in my role, I'm head of insurance and asset management for Asia-Pac and the vice chairman for Singapore. But Oliver Wyman is part of Marsh McLennan. So Marsh McLennan has got Marsh, Mercer, Guy Carpenter, Oliver Wyman. And obviously, Mercer is a big player in the asset management space. So we have been looking at this for a long time as part of the group. And in this area where you talk about alpha strategies, AI-driven, I would say the key thing is AI augmented versus AI driven, right? And we are seeing a lot of that happening. We actually, in Mercer, the first paper we wrote on AI in asset management was dated 2018, right? It says what impact of AI on investment analysts. How does that role change, right? And as far back as then, we were looking at how is AI going to move the role, how is AI going to impact strategies. Right. And it's interesting to see that if you fast track that to today, it's not so much about AI, it's about the underlying technology, right? It's about the ability to now take on unstructured data, ability to literally take on high volumes. Right. And so the opportunity is like what is shown in the votes, right? Your ability to cover many more companies. And I think even here in Singapore, SGX, you find that a lot of analysts can only cover the top 50 companies. Right. They don't really cover the tier 2 companies. They don't cover the inactive companies. Think about extending that to the rest of Asia, right? Indonesia, Thailand, Malaysia, and so on and so forth. There is a lot of undercovered companies out there. Right. And I think the ability to leverage AI in that, right, in terms of your research, in terms of your picks and everything else, actually opens the horizon up to give you those choices, right? And then obviously the ability to absorb all the data, right? Not just from financial reports, but literally from the internet, right? From all news about those companies, gives you the potential to uncover patterns, right? And hopefully also allow you to have a very unbiased view, right? You take the human bias out of these things. So I think all these things are important. We have seen it used a lot in sort of managing risk scenarios as well. So everything that Mr. Yeo talked about, right? All what we call almost existing in an era of perma-crisis. We have got permanent crisis every day now, every year. How do you absorb that sort of information into your strategies? Right? A war doesn't trigger just two competing companies. It creates supply chain stress, right? It creates a trigger on the oil side, right? All these things, you have to translate it to what does it mean to the companies that exist here, right? Those that you're investing in. How do you trace the connectivity back to that? Right. So I think there's a lot of scope for using that, right? But obviously, why have people not used it? Why is it not driving things? Why is it only augmentation, right? Because clearly there's a lack of transparency, there's complexity. In some cases, people find it hard to explain the black box. Right? How do you actually arrive at it? How did a computer arrive at this? Right? How much data and what's the quality of the data that you're using? Right? How do you prove that the data doesn't create a bias? Right? So all these things become very important for institutions looking at this to actually understand. Right? And if I'm an investor working with an asset manager, I'll be probing that. Right? And again, in Mercer, which does a lot of rating of asset managers, The past few years, there's a lot of questions about, asset managers use on ESG, how do they track that? But increasingly today, we are asking different questions. How are asset managers using AI? Right? So this has become a key component on quality of an asset manager, right? The sustainability of an asset manager. How do you progress that?
Yeah, it's very interesting that you mentioned, all this, how, you guys are using AI, or how you're seeing people using it, because I think it's pretty much quite in line with our approach as well, right? Increasing coverage, the unbiasedness. But I think one very interesting point that you raised, which I never thought of before, I think a lot of people talk about the risk of using AI, but you, I think, pointed out a very interesting usage of AI, right, to help us with risk management. So I thought that was pretty interesting. Do you have more to add on that?
I actually think now there's a risk of not using AI. All right, you'll be actually behind the game.
Yes.
All right, so I think like again, this whole idea of not leaving laggards behind. There are always some leaders in the space. You have invested in it 5 years ago, right? You are not clearly one or two that we think have been using this quite actively.
Right.
MES is also concerned about that, right? So we have been working with MES since the last FinTech Festival in November, and we co-authored a report with them on AI for the financial services sector. And obviously in financial services, the giant is always banking, right? So there's a lot of work done on AI for banking, particularly in risk management, money laundering, fraud, scams, and so on and so forth. We are thinking of extending that to include payment frauds, particularly as we go into cross-border instant payments, right? How to use AI for that. But the attention is now going towards insurance and asset management, right? And I think in the asset management space, the general view is still that we are not using, we can actually use AI to address some of the pain points in the industry, coverage being one of them, right? Quality of reports being another, right? They absorb information beyond just annual reports, right? So I think those are things that are clearly in there. I think because of that, we think the industry as a whole will rise.
Thanks for your views. Now, Sid, I think everyone knows that Google is one of the leading a provider of AI solutions in the U.S. Right? So, based on your contact with your clients, how do you think how well do you think especially the U.S. asset managers are adopting some of these AI strategies?
Yeah, thank you for the question, and thank you for having me. Good morning. Yeah, I mean, the U.S. is like a highly competitive market, as you know, right? And the U.S. capital market participants in general have been early adopters of technology. I mean, some of that is competitive pressures, but also the market structure, right? So based on the asset class, AI and machine learning tends to apply itself to some markets better than others, right? But generally, at least in the equity market, U.S. participants have been early adopters of all technology, and AI has been, pretty widely used, I would say, in the asset management space. Everything that's been mentioned so far, like in terms of, what machine learning does well in terms of, coverage and, processing a large amount of data and looking for patterns and trends, and those are all like really important, especially in the U.S. market where there's a huge amount of passive assets, as you know, right? And that creates like specific dislocations in the market whenever there's like, let's say an index rebalance happening. And then that causes like specific dislocations. A lot of systematic investing, which is kind of like trendy in a way, right? Like, so there's either momentum strategies or systematic strategies. And spotting those trends and harboring against them, that's a big trend. And machine learning has been used in that space for a while now. What's new is generative AI, and that's like a totally different, from like predictive AI and traditional machine learning. And we'll talk about generative AI in a bit, but like I think one of the challenges with machine learning, and it has been widely used, but it's expensive, right? Like it's expensive to hire the right kind of people and specialists in that space. And a lot of time spent on like, making sure you have the right data, cleaning the data, setting up like the machine learning ops, like ML ops, we call it, right? Like, and setting all that up was expensive. So there was like a a curve of adoption, right? Like some people are, more along that curve, and some people are behind. But in general, machine learning has been pretty widely used in the U.S., I would say, and I think there's a lot of in the last few years, there's been a lot of hype about AI and generative AI, and that's a good thing, because it's the tide that raises all boats. It is bringing traditional machine learning and making that easier and more accessible as well, which we think is going to continue. And as Google, our mission, as a company, is to organize the world's information, and we've always used machine learning in all aspects of our products, including search, and that's been ingrained in our company and our technologies for a long time now, right? And so it's not new for us. We're very thoughtful about how it's applied, and where we apply it, and that's, I think, important too, right? It's when you think about AI, what is the business problem you're trying to solve, and what is the right way to solve it? It's not, not everything is, you don't need to use the largest language model. Large language models are suitable for some things and not suitable for others. So it's about the right business problem and the right technology. So that's important.
Yeah, thanks. Yeah. So do you think that, and again from your dealings with global clients, do you think that European asset managers or Asian managers, do they lag behind in the adoption compared to the US managers?
Yeah, look, I think there's some variation, right? There's variation by region, there's variation by asset class, and investment patterns are slightly different across the world. And there's definitely some variation. The US tends to lead a little bit, but it's there's a lot of awareness now about AI and how important that is and how transformative it is. So we see that changing. Most of the variations are pretty, the causes for those variations are pretty obvious, right? There's different regulatory regimes, right? And there's different data privacy laws. What kind of data you use is very important. And there's data privacy laws that govern that. And the cost of hiring the right talent and the right kind of people and specialists to do this is also varies by region. So I think, but that's also changing, right? All of these are changing very rapidly. So I think it's going to continue to evolve, and I think we're going to see rapid growth everywhere. But yes, there's definitely going to be variations by region. Yes.
Now, so far we've been looking at the problem of AI in investment management industry from the asset manager's perspective. Now, I'm quite curious, from a client's perspective, how are they accepting this? You've had quite a bit of experience dealing with Asian institutional investors. Now, how are they embracing this wave of AI investing in the fund management industry?
I think just like ESG, right, the education is there. So once you go beyond the hype, everybody asks, what exactly is this? So I think a lot of institutional investors are now asking their asset managers, the chief investment officers in their organization, how are you using AI?
Right.
So they're actually almost prompting that question, right? They're curious about it, right? And I think where they are looking at it is going to be, if I use a fund manager or a hedge fund or whatever it might be, how do they as investment managers use AI?
Right.
Right, and I think it's not about what is the upside to using AI, right? What's the alpha that you create? What they're also very keen to know is how do you govern it?
Right.
How do you prevent things from going wrong? Right. So tell us about your governance structure. Tell me what technology infrastructure you're using. Right. Tell us what data you're using. Right. And how do you ensure that the data doesn't introduce bias? Right. But there are also a lot of institutional investors who are sitting back and says, if I don't embrace this, and my competitors, use asset managers that use AI, am I disadvantaged?
Right.
So there's also some competitive pressure, particularly any institutional managers, right, or asset owners, particularly like insurance companies, where investment return is a key component of their overall income.
Right.
Right? They have to look at how do I actually get the yield, right? But they will also want to make sure that whatever my managers are doing has the right regulatory support, right? That is actually within the framework that the country has.
Right.
Yeah.
Right. Maybe can I direct the same question to you, Sid? From the U.S., are you seeing also kind of like acceptance and also people putting in money into AI strategies?
Absolutely, absolutely. I think there's a growing realization that AI is going to be transformative and to businesses, and there's a growing competitive pressures that are building. There is, like I said, like I think, AI and machine learning, there's like different forms of like adoption, right? Like when you first get started, there's a lot of experimentation and you can do all that. But then when you start thinking about taking it seriously, there's a lot of like complicated things that come up. Like, we've talked about model governance, right? Like, and from a regulatory perspective, how are you going to show model governance and we've talked about like software has been a big part of like capital markets for a long time, and we've built in like checks and balances and change management processes, and all these have been done for software. But like we have to make sure all that is in place for models, right? Like how does model change governance happen, right? And how are you testing these models? How are we explaining the models? How are we doing explainability? And all those things need to be put in place, and those are not simple things, right? There's complicated like aspects of that, right? I think what is going to happen and is some of the platforms that are coming up now with generative AI. There's a lot of investment, from us at Google, also. But what's happening is it's becoming more accessible. These platforms are like essentially bringing a lot of those capabilities and providing them out of the box, so people don't have to reinvent that process. In a way, that's bringing AI closer to app developers instead of ML practitioners, right? So instead of having like specialist ML practitioners having to do this, it makes it easy, and you have all of these out of the box. So now you can have like app developers rapidly iterating on the solution and actually, solving a business problem. I think that's going to be game changing over the next, year or so. I think that's going to happen, and costs are going to keep coming down, right? Like cost of infrastructure, cost of like these base models is going to keep coming down, and that's going to drive a lot of adoption too. I think in general, like it's going to become more accessible, and it's going to become more capable to solve business problems, and that's just going to like I think increase adoption and force everybody to embrace it, because it has it's such a transformative technology that like if you don't, then you're going to be left behind. I think that's a growing realization that's going to happen.
Thanks, Sid. Now, maybe before I open the floor to questions, maybe I ask you one more question, Sid, and I think it's quite an interesting one. So in Singapore last week, there was actually a conference organized by Financial Times. It's called the Future of Asset Management, right? And in it, they did a poll on the participants, and basically they asked, where's the area within the fund management industry that you see having the greatest impact from AI, right? And turns out that 60% of the participants thought that they'll see the biggest impact on the back end, right? The cost savings, efficiency gain, time savings, and all that sort of stuff. And 12% thought that Gen AI might help with investment research. I don't know, maybe it means helping them write investment reports, right? But surprisingly, very little is said about using it at the front end, helping us make direct investment decisions. Now, just wondering whether this also resonates with your audience in the US and Europe. Are we pretty similar, or we're kind of different there?
Yeah, look, I think generative AI, right? Like it's a pretty new thing, and I think we're still in the early innings of it, like in how it develops. So it's not entirely surprising that like people think there is more pressing problems that need to be solved now, right? And so it's not very surprising. But like, look, I mean, broadly speaking, we see our clients investing in three buckets, right? Like the first one is like growth initiatives, innovation initiatives, right? Where you want to like keep up and like invest in newer technologies. And the second bucket it's also pretty big is how do you transform like and automate middle and back office processing, right? Like, and that's a big bucket that different firms are at different phases of that journey, but like there's a lot of work going on and a lot of investment in that space. And the last bucket is like investing in operational and risk management, and you want to minimize that as much as possible. But all three buckets actually, like there's a fair amount of investment going into like machine learning, traditional machine learning, maybe not Gen AI, but traditional machine learning technologies. And these machine learning technologies can solve like problems in all three buckets. Now I heard like AI money laundering mentioned before. We launched a product last year that solves like for AI money laundering in the banking space, right? And HSBC was our client, and we co-developed it with them and some other strategic banking clients, and the results are like breathtaking, right? Like, and it drastically reduces the amount of false positives. Traditionally, these money laundering like systems have like a rule-based system, right? Like if this happens, then trigger an alert, but those generally they're not very good at detecting patterns and trends, and so there's a lot of false positives, and humans have to go through each one and check. And once you start using machine learning techniques, it drastically reduces that kind of error rate. So it's been transformative, and I think just as an example, that's pretty powerful. But then when you start applying that to like some of the back office problems, either settlement fails or like things like that, you can see how that can be incredibly, an efficiency generator, right? Like, so I think that's happening in the background. But yes, I mean, there are definitely problems to be solved in all three buckets. And generative AI, everybody sees that, like, and they're excited about the transformative possibilities. But I think we're still in the early stages.
Thanks, Sid. And now maybe we can turn over to questions from the audience. Just a reminder to all of you, I think you're still not too late to ask your questions. Just scan the QR code behind your badge, and then please take this rare opportunity to address our experts here any questions that you might have on AI. All right, I'm seeing some of the top questions now, and this one is quite interesting. Maybe thank you, you can help us with this one.
Sure.
Right, it says, if more and more managers use AI, wouldn't the AI advantage just fade away? Actually, when I'm dealing with clients, I had a similar question, the same thing, right? So if AI was so good, then would it come a day when we don't need the analysts skills anymore, right?
Okay.
Yeah. I was just wondering whether you have any thoughts on that.
I think we are still in the era where you use AI from augmentation, right? There's still human judgment required. Right. So a lot of this is you're not gonna let the machine. I mean, it's a bit like autonomous cars and all those as well, right?
Yes.
I think you have to trust a machine very much before you let them do that.
Right.
Right. So I think the whole code behind all this is the human that developed the AI.
Right.
It's the human that will then use the AI in the right way. Right. So you still need to create a different skill altogether, right? It's not just about stock picking, but your ability to use AI becomes a skill, right? And I think that becomes something that will differentiate you between one company and the other, right? In how you actually use the AI versus just deploying it blindly.
It's true.
Yeah.
I was wondering, Sid, whether you have any thoughts on that?
No, I completely agree. I think it's definitely going to be a human in the middle, right? And we've seen this before. It's I was at Goldman Sachs for a long time. I started my career there, and I was fortunate to be a part of that electronic trading transformation, right? And look, I think that took a while. Like any transformative technologies like this, it's a people problem too, right? It's not only just a technology. People need to adapt to it, and skills need to adapt to it, right? And roles change. Like you change from being a traditional trader to be somebody that's like monitoring a trading system, right? Like an autonomous trading system. And there's checks and balances, and you need to understand not only the trading strategy, but also like what's the system doing, and how does it behave in certain situations, right? I think that's going to be similar with AI. I think it's going to be that augmentation, and it's going to play out over some time, and people are just going to have to adapt to the different skill set, I think.
Yeah, it's interesting. Sometimes my response to the client's question like this is, with the advent of calculators and computers, is there no longer a need for mathematicians anymore? I guess the answer is, yeah, I think we just have to, the analysts in this case, we just have to develop higher level thinking skills, analytical skills, and then to learn to work with some of the new tools. Yeah, I guess that's the point that, that we are driving at. Now, the second most popular question here is also quite interesting. Now, if AI is so good at picking stocks, why is it that not many managers have succeeded in this respect with AI? Sid, would you like to go first?
Sure. It's not easy.
Right.
Yes, AI can be good, but it's not just out of the box. It takes a lot of effort and skill. Like we talked about, what kind of data are you using? Is the data clean? Do you have bias in the data?
Right.
And all that comes into the picture, right? And it's you can't just apply AI and just get better at something. It's about are you solving the right problem? I think that's going to be important. And to your last question, right? Like it's as if everybody was using AI and doing the same thing, and if it was universally available, then the stock wouldn't be dislocated anymore, right? There would be lesser efficiencies, but then it just gets more competitive, right? And you're going to have to use like alternative data or like some variations of it and find new edges, right? I think that's going to be the case. There's always going to be that human aspect to it, where where can you be a little more creative and find that like opportunity, right? And I think that's just always going to be the case.
Thank you. What do you think?
Yeah, I think I agree with Sid, but I think the idea of stock picking is also an event at a certain time.
Right.
Right? The minute you pick a stock, tomorrow something changes.
Yes.
Right? So it's not really a case where you can always make sure that the machine can predict everything that's going to happen. So the human intervention comes in again, right? Monitoring, putting in the right judgment, and so on and so forth. Yeah.
All right. Looks like that's all the questions all the time we have left for this panel. But I think that there are a couple of few kind of big takeaways, I think, from the discussion this morning. Maybe if you allow me to summarize. I think the first, I think it's quite clear that, and we all agree that the use of AI in the fund management industry is actually inevitable, right? Maybe because of competitive pressure, or because of all the benefits that it can bring, greater alpha generation, the cost savings, and the sort of thing. So, and the second thing I think that came across quite clearly in this discussion, I think is issues such as transparency, risk management, regulations, and a whole governance structure. How it's very important. It's not just about the model itself, but how to manage all the risk around using AI models, right? And I think the third, it came across that institutional investors themselves, right? They appear to be open and ready to adopt this, but provided some of these issues that we mentioned early on are addressed, right? Okay, so with that, I bring the panel to a close, and I hope you can all join me in thanking our two very distinguished panelists once again for the very insightful discussion. Thank you very much.
Thank you.